In my previous video, I explained how US tariffs can drive up inflation, potentially eroding your savings if you do not take action. While tariffs may be temporary, deglobalization suggests we could face a prolonged period of high inflation. Simply tightening your budget might not be enough to protect your wealth. So let's explore strategies to safeguard your finances. When inflation rises, the purchasing power of money declines. In practical terms, the debt you take on today effectively becomes cheaper over time, because you'll be repaying it with money that's worth less in the future. If you secure low-interest loans and invest in assets which will appreciate in the future, you can potentially capitalize on this inflationary environment. It's essential to be selective about where you invest borrowed funds. Focus on assets that are expected to hedge against inflation and grow in value. While gold is a traditional inflation hedge, it can be costly and inconvenient to manage. Alternatively, consider investing in the US market through funds that track the S&P 500 index. Historically, since 1957, the S&P 500 has delivered an average annual return of 10%. Although you cannot invest directly in the index, you can purchase funds that replicate its performance. These funds offer diversification across various sectors, can help mitigate the higher volatility and company-specific risks you might face when investing in individual stocks. TradeWar can introduce market volatility, yet it also creates opportunities to buy the dip if you're investing for the long term. One approach is to borrow low-cost Canadian debt and invest in the US assets. This strategy won't make you rich overnight, but it may steadily build your wealth with patience. Additionally, the CRA may allow you to deduct interest costs on eligible investment loans, effectively reducing your borrowing expenses. Be mindful of common pitfalls. Avoid high-interest loans for risky ventures, such as cryptocurrencies or using credit cards to buy stocks. These scenarios can be fraught with scams or excessive risks. Stick to reputable financial institutions offering more conventional loans, like secured life credits, at reasonable rates. Remember, les petits ruisseaux font les grandes rivières, which means small streams make big rivers. Consistent, prudent investments can lead to significant wealth over time. If you'd like more details or have questions, feel free to send me a direct message. Thank you for watching, and I will see you in the next video.